Hi, everybody. Tom Gile, the Gile Group. As the Fed started raising the federal funds rate almost a year ago, there was a lot of speculation of what the impact was going to be both on mortgages and the housing real estate industry in general. Many were predicting a market crash or at least some sort of major devaluation of home prices as demand dropped off the table. So, in this week's Tom's Take, we're going to take a look at what really happened during these uncertain times, the financial times, because I think it's important that we look at what happened as the market faced uncertainty and learn from that. So, we are in some uncertain times now, still with the recent failures of Silicon Valley Bank, some unknowns about how the Fed's going to handle inflation and interest rates going forward. So, I think we can learn a little bit from what happened. Let's take that information and try to project it forward to what we think is going to happen in the market. And that's what we're going to do today. So first, we're going to take a look at just some major predictions that we had as we rolled into this market almost a year ago. One would be that sales would decline. And the reality of this situation is, yes, they definitely did decline. You can see here they started to decline about midway through 2022. We've been talking about that in the past. And, we're riding down that seasonality curve. But as we're coming up the other side here, you can see in February and March, there's still a gap compared to last year. And sales are down actually about 30%. So now let's take a look at the supply side of the market. And the prediction was, I think listings were going to start to rebound in the spring. We always things slow down in the winter, things are going to be good in the spring, everything's going to be great. There are a lot of people have that attitude that, yes, I'm going to wait till spring and things are going to be better. So the reality of it is listing activity obviously did jump as we got into January, but it hasn't followed that curve that we normally see. And you can see that here. It shot up in January and has remained pretty flat ever since. So what has this done to the market? The prediction was demand's going to drop out and prices are going to crash. Well, we definitely did see some, a decrease as we came off that super hyper market in May of last year. But look at the graph here. We really have bottomed out. And since about the beginning of this year, prices have been pretty stable and started to tick back up again. And this is really the reality of what happens when we had a pretty balanced market of both supply and demand. Yes, sales dropped off, but so did so did the supply side of that. So it remained a relatively stable market in terms of inventory, still pretty low. So here's my take. People are always going to need to buy and sell homes. There's what we call like the 4 or 5 Ds. It's diamonds, diapers, downsizing, unfortunately, divorce, things like that. So those keep people buying and selling. Like I just said, there's been good equilibrium in the market lately. It's kept supply and demand in check, which has in turn kept prices in check. There continues to be uncertainty in this marketplace, especially, with some recent bank failures of the Silicon Valley Bank and Republic Bank. So we need to keep a sharp eye on what the Fed's going to do, because what I've heard is that, the Fed usually raises interest rates till something breaks. Well, in this case, the banks broke before the housing market broke. So the Fed's going to have to try to correct what's going on with the banks. We'll likely see some relief on the mortgage and interest rate side of that. So time is going to tell, but I think if we take a look at just what has happened in the last 10 months or so and what is going on with the Fed now, and we'll know more as they make their March announcement, I think we're going to see a little bit of relief on the mortgage side of things, on interest rates, and probably some more stability in the housing market. So have questions or want more information either on the market in general or in your home? Ask the Gile Group. Send us an email at askgilegroup.com, reach out to us on social media, or give me a call. We'd love to hear from you.